Alright boys and girls, what is up? Welcome back to another video. As always, I am Crypto Maximalist, and today we are going to be taking a look at a crypto that I've been researching quite a lot recently. I've recently been in contact with the team, and I just wanted to bring to your attention this crypto basically and look at some of the fundamentals behind it, because I think it's a really interesting concept, and also potentially a crypto that others might be interested in hearing more about, because personally I've actually been using it myself and it has been really interesting, and also just very good, very slick, and I think in general just a very interesting concept and something that I think it would be interesting for people to be made aware of. So we are taking a look today at Equation, the Equation token here. As you can see, one of those two little parameters there, the fair launch and the real returns, those two things are obviously very interesting in cryptocurrency. Fair launches tend to be something that people are after quite a lot, and that has recently happened for Equation. They've only been going literally for about a month now, but they've already seen some very nice returns on their token itself, and their platform has been getting a lot of use, going over, I think they're almost at $1 billion of transaction volume already on their protocol. So it's very interesting to see what's going to happen next with these guys. And I just wanted to go over some of the fundamentals today for you in this video. So as always, please do like and subscribe, leave a comment, get involved, and make sure to check the links down below for this token, which we'll leave in the comments and also in the description. So without further ado, we're just going to have a little look through this presentation that the team have provided me with, so that we can take a look at this in a bit more detail. So you can see there's just some stuff about the protocol here. Equation is a decentralized perpetual contract protocol based on Arbitrum, audited by the third-party audit from ABDK. With its innovative BRMM model, Equation allows traders to establish larger and unrestricted positions with up to 200x leverage at lower liquidity risk, which I think is really interesting. Obviously, leverage trading is a big part of cryptocurrency in general, and I do think that up to 200x leverage is very interesting as well, in my opinion. Something that, you know, not a lot of platforms provide, and also with the lower risk regarding this, I think it's also very important. There's a lot of platforms, as you'll see most likely on the next slide, I believe it is. There are a lot of platforms that offer leverage trading, but there is quite a high risk of liquidation. But Equation, the way that they've got things set up, they're actually offering higher liquidity for leverage trading and actually less risk of being liquidated at the same time, which I think is really interesting and definitely a big selling point of the platform. You can see here it says simultaneously liquidity providers can access enhanced capital efficiency by using leverage on Equation whilst having lower risk of liquidation, which I think is really cool. It also says, as one of the DeFi protocols advocating for a fair launch, Equation is taking concrete actions to showcase how community-driven innovation is shaping the future of decentralized finance. It prioritizes security and transparency and aims to provide traders with a reliable and secure environment for perpetual contract trading. So I think this is really interesting, because obviously a lot of trading goes on still on centralized exchanges in cryptocurrency, and a lot of them have been coming under a lot of fire recently. Obviously Binance being the one that has been absolutely attacked recently in the US, as no doubt you've seen if you're in the cryptocurrency space. So I think decentralized trading and being able to get good leverage and low liquidation risk in the decentralized trading space is going to be a big thing. And especially since this is on Arbitrum as well, there is a lot of liquidity on Arbitrum, but not that many protocols, I believe, that are actually that good for trading. Obviously there are ones out there, as you'll no doubt see on this next slide. You can see here you've obviously got Perpetual Protocol, DYDX and GMX, who are competitors, you would say, in the same kind of contract trading platform scene, as you would say, for Equation. But you can see obviously here the maintenance margin for Equation much lower, and the maximum leverage as well is much higher. So overall they are offering more, while simultaneously also offering you less risk at the same time, which I think is a big pull to the platform. It's going to be interesting to see how this develops going forward, because I think when more and more people realize about this, they're going to be piling in to use this platform. Obviously at the minute there are limited pairs and limited liquidity, because the platform is so new. But obviously I think as more people come in, more people stake their Equation and also provide liquidity for the ETH pair, that the platform will become more stable, and obviously more pairs will become available as the platform does grow. So I think this is obviously really interesting to look at. And you can see, as you can see here, some details of the basically the main net, the first month online, some of the volume that they've seen. This is a little bit out of date because they did post just today, or when this video will be posted, a few days ago, that they'd hit $800 million in total trading volume, which is really, really interesting. I think about 100 million open interest, and basically it was a lot. They've been also their token value at the time of recording this video, the all-time high was just over $40. So obviously these numbers will continually rise as they continue to grow, because it's looking like they're experiencing a very, very nice period of growth at the minute. So it's pretty likely that they're just going to basically continue to grow and see increased volume, increased token price as things develop, because they've been a very, very new protocol, and these numbers are continuously improving all the time, which I think is really cool. It's very, very interesting to be a part of something at the start of its life cycle and see, especially with such a good product, how this thing will develop over the next few months and over the next bull market. I mean, to be honest, leverage trading is going to be a massive part, I think, of the next bull market. So it's going to be very interesting to see what Equation do going forward with that. As we could see then, the next slide, equating and talking about the fair launch, which I think is also another thing that people really value. You can see here a maximum supply of 10 million tokens. 100% of it is generated through mining and rewarded to community users. The initial daily issuance is 10,000 tokens per day, but it can be adjusted through the DAO. Obviously, Equation is a DAO, so this will all be voted on by the community. But I think, considering that the emissions are fairly small, considering the total supply, and also the way in which I'll talk about later, how the supply is burned as well, depending on how people are basically buying and selling and using their Equation. I think it's going to be interesting to see how well the longevity continues for this platform. Obviously, people are always concerned about when tokens start off with an initial circulating supply that's really small, but they have a massive total supply. It's always one of those things that people tend to think limits the potential price movement of the actual token itself. But I think Equation have got some very interesting ways of looking at that, which I'll talk about later in the video. But right now, as you can see, the initial daily issuance is 10,000 tokens a day, and Equation holders can earn up to 25% of the protocol's trading fee income by staking. So big, obviously, as always, giving incentives to for people to stake and not sell. So the sell pressure is reduced, and also getting rewarded for that. I think there's always a balance, isn't there? Trying to get a balance between having issuance of tokens and also which is basically diluting the maximum supply, the circulating supply, and basically making the tokens technically worth less, and also giving people enough incentive so they don't just continuously sell their tokens and have massive sell pressure. So it's going to be interesting to see how they manage this, but I think it looks as though they have got a pretty good balance of things, as we can see here. There's obviously quite an interesting staking model, which I was taking a look at earlier and thinking this is quite a good idea. Obviously, when you stake your EQU, you get VEQU. You get some of the fees from the protocol, as this obviously is a protocol for leverage trading. Fees that are used as people trade, you get a share of those as well, which is interesting. You get to participate in voting when you get your VEQ. EQU, I'm just going to call it EQU because I think that's probably easier to understand. When you stake, you get VEQU as a 1-to-1 ratio, and then essentially what happens is, when you have VEQU, you can participate in voting and governance, as well as the fact that you can't trade or sell these, so that you can only get them via staking your EQU. So basically, those that are invested in the protocol can decide on the protocol, which I think is fair. And as you can see here as well, you basically get, if you stake your EQU directly, you can obviously get a share of the transaction fees, but you can also stake your EQU in the ETH pool, the EQU ETH pool, because obviously they need liquidity, and you get a share of the transaction fees there as well. And you also receive mining rewards for this, a 20% of the daily released amount of EQU as well, which is interesting, I think. And you get VEQU from this method as well, which allows you to participate in staking as well. So you can see here, either way, if you stake and invest basically your EQU into the protocol rather than just holding it, waiting to sell it, you will get governance rights where you can shape the future of the protocol, as well as receiving some nice rewards as well for doing so, either getting transaction fees, or if you go into the actual liquidity pool with ETH, you can also get some of the daily actual issued EQU as well, which I think is interesting. You can see down here there's a few caveats, but it's basically what I've just covered here. And there's also an interesting proposal coming forward, which I'll speak later to, about the fact that you have also potential diminishing rewards for long-term stakers, giving people new incentive. As you can see here, this is pretty much exactly what I was just about to talk about. The burn mechanism, you can see here, according to the Equip 1 proposal, users must first choose to lock up their lockup period before claiming their rewards. Different lockup periods correspond to different EQU distribution and destruction ratios. So obviously it's important when you have a consistent issuance of tokens and you're essentially diluting the supply of tokens to have a method to try and basically rope in the amount of tokens that are being put onto the market, so to speak. Otherwise you will end up with lots and lots of tokens being put back into the market, and it will basically diminish the amount of gains that the potential token can get just because of the continued dilution of supply. But you can see here this proposal aims to reward users who have a confidence in the platform's development through a token burning mechanism to reduce the maximum supply. There is a potential increase in the value of EQU, thereby encouraging users to make long-term investments in the Equation ecosystem. So as I said before, essentially what happens is the longer that you lock up your tokens, the less of the tokens that are burned. But obviously if there's no lock, the vast majority of the tokens will be burned here, 75%, which basically means that there won't be too much dilution of supply of people that stake and then unstake, etc, etc. People that invest in the platform do get rewarded more than the others, which I think is also interesting. The second proposal here that we're talking about is the Equip 3 proposal, the Pool 2 mining proposal, which is essentially encouraging people to basically put their EQU into the ETH pair on Uniswap because they need liquidity. Obviously every platform needs liquidity, especially one that is doing leverage trading. And you can see here, obviously this fosters a more balanced development of the Equation ecosystem, which is very, very important because you do need liquidity for every single protocol. And I think Arbitrum is a great place to launch because they have a lot of liquidity on the chain itself. And I think that this is also benefiting them because people are quite easily able to just shift over to their protocol and use it. You can see here, as I said before in that previous slide, the users will be able to participate in the sharing of 20% of the daily EQ emissions by staking in the EQ ETH liquidity pool NFTs from the Uniswap pool. This allocation will be calculated based on the quantity of EQ in the pool at the time of locking and the length of the period. As I said in the previous slide, the longer that you lock up, the more you will actually get without being burned, etc, etc. And you can see here, I've got a few more links. As you can see, I'll put all these links in the description so you can take another look at this protocol. But overall, I think that this is a very, very interesting protocol indeed. And I'm just going to take a quick look at some of the other pages that I have here. The current price of the token, obviously very, very important for people. It said on that slideshow that it was around $35. And you can see here that that is actually the case here as well. You can see if we look at the all-time chart, basically on CoinMarketCap, we started tracking the token at around, what is this, $6 or $7, $7 or $8 here, at basically around a month ago now. And you can see we've shot up to around $35 so far. Market cap is still only $2 million, which is very, very small. You consider that a micro cap in regards to cryptocurrency, if I'm being completely honest. You can see that obviously the fully diluted market cap would be close to $350 million, which is much higher because there's obviously the circulating supply is so small right now because basically none of the tokens have been issued. But if you think only 10,000 tokens are being issued per day here of this total 10 million supply, it's not a very, very fast dilution by any means, considering the small nature of the market cap here of the actual token itself. And then if you think about the burns that will be coming into place as well, I think this is a very, very good start for the protocol, and it's going to be very interesting to see what happens next. Lots of people getting bullish and interested in the token on CoinMarketCap as well. You can see here they've started listing on actual exchanges, and as you can see here, they're on Bing X now, and obviously already on Arbitrum on Uniswap, where they are looking for those liquidity pools to be filled. I think this could be a potential amazing opportunity long term to get into an actual really good project that's got genuine potential and a very, very good use case. Not to mention there's a ton of liquidity, as I said, on Arbitrum, which is going to start coming across to this. And I do think this is a crypto that potentially, once people do start hearing about it and using it more, the token itself is going to increase in value quite a lot as well, and definitely, in my opinion, benefit investors. And then just a quick overview of those things that we've just seen here. You can see there's just a few articles explaining what I've just gone through, basically talking about this proposal for the burn mechanism, which is essentially rewarding people for keeping their tokens locked into the ecosystem for longer. If people don't keep their tokens locked in, then there's going to be a lot of tokens being burned, which is obviously very, very good for the price because it stops the total supply from getting too extreme. The next one, proposal for implementing the time diminishing position mining coefficient, which is obviously the thing I also talked about here in a little bit earlier, but it wasn't actually in the slideshow. But this is very, very interesting. Essentially what it means is the longer people are in positions of mining in the protocol, their rewards for that will be diminishing over time, which I think is important because it basically encourages new people to have very, very high reward coefficients, but they'll also don't want to just initially sell because the burn mechanism. So basically what you've got the balance of people coming in early into the protocol and basically getting involved in the protocol, but then not just immediately selling their rewards as well. So you're basically giving people double incentive, the double incentive of getting high rewards, but also basically another double incentive of keeping those rewards staked for a long time, so there's less of a burn on the tokens, etc. So I think it's very, very interesting overall. They've got a few very, I think, good and useful mechanics for keeping the ecosystem healthy, not getting too much dilution of the token. And then obviously we also talked about this as well, basically people getting rewarded for becoming a part of the ecosystem by basically staking in the EQU ETH pool, which is very, very important overall because it's going to keep the whole ecosystem very, very stable. And I mean, going forward, I think this is going to be a very, very interesting cryptocurrency. I'm personally feeling quite bullish on this. Once the team actually reached out to me and told me about it, I was already looking at the crypto. I'd seen it floating around on Twitter and I was looking at it for a few weeks before they contacted me. But once I had a chat with them, I realized that this is probably going to be a very, very potentially successful platform. And overall, I am very, very excited to be covering it. And I think potentially this is going to be doing some absolute bits over the next few years, depending on how much use it does get. But overall, things are looking very good so far. And from what I've been seeing, things are looking very promising for the future as well. I'm really liking the fact that things are getting agreed by the community. I love that when things are more decentralized like that, it really does help out the platform, I think, overall. The fair launch, also a massive, massive selling point. As you can see, it's done very well since then. What have we done, like 3 or 4x since then? 5x from $7 to $35, about a 5x in about a month here. And I think this could just continue to run, to be honest, as the platform does get more use. So that is it for today, guys. Thank you very much for watching indeed. There'll be links for all of this down in the description, including a referral link that will shamelessly plug now. Please go and use that if you're going to use the platform, because you will get some benefits, 10% discount, and also some multipliers for your rewards from mining pools. So make sure you use that referral link down below. Like and subscribe, leave a comment, let me know what you think about this platform, and I will catch you in the next video. Cheers.